Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me, we have Noora Al Bahrani, Chief Compliance Officer of Aarna Capital, as well as Jack Kay, Lead Surveillance Sales Executive at Nasdaq. We're here to discuss regulatory trends in the UAE and the emphasis this puts on compliance. It is great to have the both of you with us. Welcome to Trade Talks. And Noora, let's start with you. Talk us through some of the regulatory trends that you see specific to the Abu Dhabi region.
Thank you, Jill, for having me today. Just recently, actually, the UAE started looking at sectorial risks a lot closely. They're following the national risk assessment that has been undertaken for the past few years. And more importantly, they're looking at the sectors and trying to figure out the various kinds of underlying risks that customers operating out of these sectors would be exposing the UAE market to. Specifically in Abu Dhabi, talking about the Abu Dhabi global markets, for instance, looking at trends such as transaction monitoring and making sure that, firms do have the levels of controls and follow standards that are commensurate with the types of business that they conduct and the types of products they offer to the clients, understanding client suitability as well, making sure that, proper AML frameworks are set up in place. So these are the kinds of themes that currently in the UAE and specifically for Abu Dhabi are being looked at, mainly for broker dealers such as the field where I operate out of, but as well for virtual assets. I mean, this is an ongoing trend that's been hitting on both digital assets as well as traditional finance.
Jack, let's talk about the growth in the UAE. Tell us about increased institutional presence in the financial center of the UAE, particularly in Abu Dhabi and Dubai.
Yeah, absolutely, Jill. So we've seen a large increase in the UAE of the institutional players, right? Especially in the Abu Dhabi Global Market Financial Centre. There's a few main reasons for that, right? And people are probably well aware of there's business-friendly conditions out there, whether that's tax-related benefits. The actual time zone of the UAE covers the rest of the world quite well. If you're looking into APAC and Europe, maybe the US less so. But what we have seen in the ADGM alone, there's over 100 financial sort of services institutions out there now. That's a mix of fund managers, asset managers, institutional brokerage firms. So we are seeing that large increase in the area. And I think what we're also seeing on the flip side to that is firms looking into the UAE from the outside, right? We're seeing large banks, international banks, global hedge funds that are necessarily based out of the UAE and looking to get in onto those markets, right? And we're seeing that access increase. These access to the markets are becoming easier. The connectivity, the infrastructure is in place within the UAE. And what that kind of leads to from a regulation perspective is these big global banks and hedge funds, especially on the bank side, right? They want to make sure that the markets that they're going to be trading on, they want to do their due diligence, right? They want to make sure that they are fair and equitable marketplaces. And that's what the regulator has to balance, right? Is we want the largest organizations to be attracted to our markets. So therefore, we need to put robust regulations in place. But on the flip side, the firms are actually based out of the UAE in the ADGM. They want to make sure that they're keeping pace with the growth of that market, right? To ensure there's no exploitation. And that's the fine balance that we're seeing at the moment in the UAE, is that mix of firms based there that are setting up and growing, but also large corporations from around the globe getting access to those markets and taking out advantage of the increased liquidity.
Right. And Noora, if you could comment on what you're seeing in the UAE as well, but also on practitioner priorities versus the divergence in international standards.
Right. So the thing about the UAE and specifically about the Abu Dhabi global markets is that they're trying to maintain international standards as well. But then the interpretation of what international standards are and the way that firms build their internal frameworks and controls to emulate those international standards, their interpretation of what those are. At some instances, we've seen that these are roadblocks, really, because some of those international standards may include following regulations in other more developed markets that some entities may seem are a bit too much or overly regulated, and that kind of stifles growth and doesn't allow the opportunities that the UAE actually has to offer to actually be fully explored by those international firms here locally. So it does require a bit of a fine balance and an interpretation of what the international standards or best practices are, and how these firms would be willing to adopt them internally and to use them to conduct their business, but also remain attractive to global players.
Yeah. And Jack, can you give us an example of a fine that occurred in the institutional space when firms weren't exactly meeting the regulations?
Yeah, so I think towards the end of last year, around November time, we did see action from the Dubai Financial Services Authority, so the regulator in Dubai. They fined a bank in the region just under 400,000 US dollars for having inadequate trade surveillance solutions in place. Now, although we don't always like to see firms fined, right? I think it sends a clear message to the market that, look, when we see fit, we will take action, and we want to ensure that we do have the correct regulations in place to drive the economy. But I think Noora makes a great point. It's that fine balance between regulating it so it's attractive for local firms and international firms, but not over-regulating it, right? We've perhaps seen that in other areas across the globe, and I think that's the fine balance that the authorities and the practitioners Noora mentions are playing with.
Jack, what about retail trading?
Yeah, I think retail is an interesting one, right? I think across the globe it's very interesting. We are seeing huge growth in the retail markets. According to Forbes last year, retail traders made up just under 25% of the volume across the globe. Which, when you think about it, that's a huge amount from retail traders, right? And I think that's because of the access to markets is a lot easier nowadays on your phones, the tip of your fingers. So I think, yeah, we are seeing that in the UAE as well, increased retail brokers, retail traders, access to these retail accounts. And I think what that leads to, it's obviously the UAE is not the sole growth of retail, but it's part within the UAE. And I think that just adds, again, more trading activity, more participants. All that leads to increased data, and data leads to complexity, and with complexity comes potential risk, right? Areas for exploitation. So I think that's something, again, the UAE are keeping an eye on. And Noora touched on it at the start. We mentioned digital assets, and that plays into the retail sector as well. I think digital assets itself can be a whole different discussion point around the regulation around that, not just in the UAE, but across the globe. But again, that will factor into what the authorities are looking at. And again, it's just increasing that flow, as I mentioned, again, which can lead to complexity and potential risk.
Right. And while it's encouraging to see accessibility, more participation from retail traders, Noora, what about consumer protection?
I think flowing from, or actually the main point behind consumer protection is suitability. So yes, information and data, just as Jack has alluded to, is available at the fingertips of all retail investors. However, the problem is, do they really understand the risks associated with those types of products and services, and the methodologies that are used to conduct those trades? This is something that is on the minds of those regulators, and the local regulators here are constantly building the consumer protection laws to ensure that consumers don't face any unmeasurable risks and risks that they didn't account for, they don't know how to mitigate. So obviously the retail clients are the most exposed to those kinds of risks, because professional investors or institutions actually do understand the risks, and they've got various tools, and whether professional technical tools, or they have the knowledge and experience to manage those risks. But retail clients don't usually have that available to them. So consumer protection is something that is constantly developing in the UAE, and they're looking at different ways to ensure that retail clients specifically are shielded from unnecessary risks or unsolicited advice that is available out there.
And Noora, what about expanding into international markets?
So, I mean, the UAE, the firms that are based out of the UAE are actually looking at creating the environment internally where they're able to manage a more global clientele base, and that way it allows them to get exposed and to allow exposure as well to liquidity markets available in the UAE, but as well to allow clients globally to have access, not just to local, but to actually provide them connectivity with other international markets and exchanges. So it's a bit of a difficult situation for these firms, because they do want to be able to to conduct themselves internationally. But also they also have to have the local hat on, where they have to deal with the local regulators and ensure that they comply with the requirements and standards. There are lots of markets out there that are unregulated that provide a lot of opportunities for those firms, but they definitely don't want to risk and have any risks associated with these exposures internationally to come back into their local offices here.
Right. And Jack, you're certainly seeing it in the international volume data that it's certainly increasing across the derivatives markets.
Yeah, absolutely. I think what we're seeing across the globe, right, is globalization effort from all areas, right? In APAC alone, we're seeing last year around 100% increase in APAC options, right? Now, not all of that is driven out of the UAE, but it's just it's the sense of the globalization that's going on. Similarly, in the EU, you had the LME, right? There's about 35% growth from Q1 in the first 4 months of last year. And again, we're seeing firms reaching out to other markets, right? Global futures markets in the US, derivatives markets in Europe. And I think what this does, these big global exchanges, they also have very sort of strict expectations on their members, right? If you want to become a member of these exchanges, you need to make sure you have robust and effective solutions in place to make sure you can meet those requirements, right? And what we're seeing is firms that are wanting to improve their solutions so that they can comply to these international standards, as well as the local regulations as well, like Noora mentioned. So what we're seeing from firms is maybe changing their surveillance system to make sure that they can effectively monitor for market abuse, potentially that may be taking place, and demonstrate that to the regulators, or that may be improving their risk system, right? They've got increased exposure, and that's maybe how they want to mitigate some of those risks for both themselves, but also the clients as well, which is super important. And the clients are pretty much what is at the heart of this.
Right. And Noora, tell us about the partnership with Nasdaq surveillance team and how the regulators receive that.
I mean, it goes without introduction, just the name Nasdaq on its own is quite significant, and all the regulators are very aware about the capabilities that tools provide. So obviously, when there is a partnership with a solution provider such as Nasdaq, they're a lot more comfortable because they understand that, the level of sophistication of the data analysis, and specifically talking about in my space, which is surveillance, looking at the tools and the capabilities from a case management perspective, from the ability to investigate any alerts, setting those alerts, setting the various thresholds. So that's the sort of decision-making capabilities that the regulators want to see firms in the commodity space or derivative space actually have internally and built within their internal controls. They want to be able to see that there's an actual governance behind all of this. So this is something that's highly welcomed, and it's really encouraged by regulators. It's better than having a tool that has been untested previously by any other provider, and nobody has experience in working with them or understanding exactly the back office functions as well. So regulators are quite comfortable with tools such as Nasdaq's and other technology providers out there in the market that are more experienced and have been around for a while.
Right. In order to wrap up here, I mean, obviously it's a two-way process, right? The regulators want to make it an attractive place to trade and attract business to grow the local economy.
Yeah, I mean, there's always a private-public partnership that's ongoing, and the regulators have more recently been a lot more involving of the local community here, as in the business community. They have a lot more outreach sessions. Just last month, we had an outreach session on the latest national risk assessment, and they constantly try to, explain what their agenda is, what their thought process is, what it is, what their expectations are, what the standards are. So I think, this ongoing collaboration and ongoing partnership and open communication that we have with the regulators, something very healthy over the long term, short term and long term as well. It gives us the ability to build up awareness amongst retail and professional investors and amongst entities themselves, companies that operate within the space.
Right. And Jack, to wrap up here, expanding what Noora had mentioned earlier, that fine balance between not over-regulating, but providing that transparency so that you don't stifle innovation and accessibility within the region.
Yeah, absolutely, and I think that's the biggest challenge, right? Between doing that, you want to make sure it's an attractive area for setting up businesses, an attractive area for outside businesses as well, and it is that fine balance, right? And I think that's working with the firms within the region, as Noora mentions, that is what they can try and achieve as the end game, right? We want to make sure this is a great place to do business. We want to increase the liquidity of our markets. We want to increase the flow, but also we want to make sure that we're not stifling that growth as well. And I'm sure over the next few years, that's what we'll continue to see is that playing out.
All right. We appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.